edition of the world's largest FinTech Fest, Global FinTech Fest, organized by Payments Council of India and FinTech Convergence Council, the two councils of Internet and Mobile Association of India, along with National Payments Corporation of India. This fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and is supported by Niti Aayog, Startup India, and Invest India. I would also like to take this opportunity to quickly thank our partners, our powered by partner Razorpay, brought to you by Amazon Pay, WhatsApp, in association with partner Google Pay and Open Financial Technologies, and digital payments partner Cash-Free Payments. The second edition of the Global FinTech Fest revolves around the theme FinTech Empowering a Global Digital Economy and provides an in-depth understanding of the latest businesses, policies, investments, and technology developments within the FinTech landscape globally. And it's with great pleasure that I would like to introduce to you our first session for the day. This session is a panel discussion on the topic FinTech Empowering Financial Inclusion. And for the same, I would like to welcome our esteemed panelists, our moderator, Mr. Rolf Hodenschild, co-founder, engineer. We welcome you, Rolf. Along with our other esteemed panelists, Mr. Rajneesh Kumar, co-founder and CEO, InstaPay Technologies, Mr. Peter Franken, Director, ASEAN Financial Innovation Network, AFIN APIX, and Ms. Hina Mehta, co-founder and CEO. Thank you to all the panelists for joining in, and thank you to the audience as well. For the audience, put in your questions on the right-hand side in the chat box, and Rolf and all the panelists will try to respond to them at the end of the session. Over to you, Rolf.
Thank you very much for the introduction. I'm very much looking forward to having a great and interesting discussion with the esteemed panelists here who are joining me about financial inclusion and how FinTech can empower this financial inclusion. So to start out, the question of where are we actually with regards to financial inclusion? What's the status of it? What have we achieved, and what do you see as the current gaps, maybe also with an aspect of how can FinTech help resolve those gaps? Peter, if we can draw on your broad experience first.
Yeah, I think if we think about financial inclusion, I think it's important to first of all say that it's still very much a challenge. But there's a lot of things that have changed over the last 10 years that allow things kind of are coming together. One major, if you look at the total pie of people in Asia, and on the top we have people that have digital capabilities and being served digitally by their banks. This actually is a very small part. Most banks in Asia, even today, are not serving their customers digitally, even though their customers have digital capabilities, and that kind of limits the services that people get. So even though they're kind of financially being included, they're actually digitally kind of not very happy with that. And then there's still a very large number of people that are increasingly digital but don't have access to financial services. So I think this is kind of where the current state of things are. The excitement is that there is a lot of new coming in, propelled forward by new technologies such as cloud computing, API-based systems, and also through, I would say, sometimes we call them disruptors, but I would call them innovators that have come in with new ideas around financially serving customers, not necessarily in the traditional way banks are doing that, but by offering embedded finance services or combining things together that reach out to people and provide them access to financial capabilities in there. So Rolf, is kind of where we are today, and obviously financial inclusion has been around as a topic for many years now, and effectively, if you really look around to many banks around Asia, it still has not happened. But I think we're now at a critical point in time where we have the technology, many people are digitally enabled, and now we need to kind of start to kind of see how can we create real scale to start servicing those people across all those geographies.
Thanks, Peter. I'm already looking forward to exploring more about the gaps in that infrastructure and the difference between the fintechs and the more traditional banks. Hina, where do you see the gaps in financial inclusion? I understand you take a quite particular approach. You try to fill a particular gap there.
Yeah, so it's actually a very exciting time to be building fintech, especially in India right now. Right, totally echo what Peter is saying. I think platforms are in place, the infrastructure is in place. Digital adoption has just grown exponentially in the last, even if you look at just the last 3 to 5 years, right? So the environment, the ecosystem, the infrastructure, everything is in place, and it's just about sort of building on that to cater to needs of both consumers and businesses that have previously been left out of the formal financial ecosystem. With the startup, my startup basis, we're building India's financial services destination focused on women. There's a massive white space if you look at across the spectrum of financial services, starting with investments through credit, even insurance. Women represent less than maybe 15% of active informed consumers of these services, and that's the space we're operating in. There are gaps, of course. I mean, historically, this industry has tended to cater to, the wealthy individuals. Men have historically been the owners of wealth, and that's what has been taken into account as financial products and services have been designed. But that's changing, and gaps we see, and we're trying to fill first as part of the user journey on our product are knowledge, trust, confidence gaps, right? I don't know enough. Therefore, my money is just best lying at best in my savings account, or I don't trust the advice I'm getting or the services and products that I may, stumble upon. I'm not going to, take any action. And I honestly don't feel like I know enough to take that leap into making my first investment or buying that life insurance or health insurance or whatever it may be. So these are the initial gaps we're trying to solve, starting with filling the education gap, and using a very community-driven approach to learning about money. And we think that's going to be critical. Personal finance is, again, it's a huge space. We don't learn about it in school. We tend, as women especially, don't tend to even sort of talk about it within our social circles and our communities. And that's the change we're bringing about first with Basis. And then we want to move into, the gap there is in data that's being taken into account as products are being built, as advice is being given, as services are being designed for this segment. So we're building curated products for women. Women's lives do differ from those of men. If you look at financial trajectories, income patterns, risk profiles, how decisions are being made, it is very different for this particular segment. And we're diving deep, taking a systematic approach and building a hyper-focused solution to really fit the needs of this previously largely ignored segment within financial services.
Great, thanks for those views and that intro. Rajneesh, you are bridging a bit of the both with your solution, infrastructure, as well as the integration of previously underserviced communities. Maybe if you can give us your views as well of what is the status currently in financial integration, your areas, and where do you see the gaps? How are you approaching them? How are you filling them?
Thanks, Rolf. I think we are starting off to an interesting discussion here. Let me touch upon 2 points which we come across very often. And we basically work with the foreign migrant workers in Malaysia. And that has got some peculiar challenges. And that's when I speak about some of these things, it will also be sort of give you a flavor of how financial inclusion of somebody who's in a different country can also pose some very different challenges. One of the things that Hina also spoke about, which is around financial literacy, is a big challenge. And the literacy can actually come in two forms. One form is very obvious, which is around fear. Fear of, let's say, new thing, trying out new thing, to new technology. So, for example, somebody who's not used a card, for example, how do you help that person understand how he can buy things online? Now, he wants to buy things online, but he's incapable of doing because of fear. And that's a big impediment we come across, fear. They feel intimidated of trying out new things. When you talk about people who are really at the bottom of the pyramid and just getting into financial inclusion. What is not so obvious is also the lack of understanding of how, when you choose formal financial channels versus informal financial channels, you create a digital footprint which can give you access to other services down the line. Like, for example, you may become eligible for credit because you create a financial history. These things are not so obvious. So educating them is something that we find quite challenging. The other aspect is around onboarding of customers. Okay, and when we look at cost, typically when you look at cost of servicing this segment, the most obvious thing that comes to one's mind is around the cost of servicing, because these are relatively poor people. The ticket size are small. So hence, how do you run a profitable business? And that's the most obvious question that comes to our minds. What is not so obvious is that it's a chicken and egg question in terms of cost of onboarding. If I was to onboard you, you have a bank account, you have a financial footprint. I can onboard you very easily. The regulations are very simple for you. But when I have to onboard somebody who doesn't really have a footprint of with any financial institution, it's actually a lot more tedious and a lot more expensive. And that's something that fintech like ours find it a lot more challenging than the cost of servicing, because we are a tech-enabled entity. We have exactly built a model which allows us to service in a very cost-effective way because of technology and the enablement. But what is not so obvious is that you need a regulatory framework and a regulatory infrastructure which allows you to onboard customers in a cost-effective manner. And that's something which I think is a big challenge. Yeah.
This is giving us a great gateway into one of the topics for financial inclusion. Exactly that onboarding that I hear across the board is one of the most challenging pieces in the financial services, and how to actually get the information of those people. And there the question, we're hearing about digital identities. How is that being rolled out? How can that be used? To what extent is this a crucial building block of financial inclusion? Maybe, Hina, if we can start on that with you. You certainly have some experience there.
Right. So, of course, the India stack that started off with the creation of Aadhaar, that I know is something that's known about globally now, was has been a game changer, right? I think digital identities are step one, and KYC onboarding pieces we talked about are, the cost of all of that has gone down dramatically. I think as of now, over 1.2 billion people in the country have this digital identity, and it, just offers that super seamless, ubiquitous layer on getting, onboarded, on getting that initial access for providers. It's cheap, it's seamless, it's fast, it's quick to verify, authenticate. So that's the first layer of the India stack. We're still at the tip of the iceberg. It's still only a decade-long project. It was kicked off in 2010 or so. And I think the possibilities are endless. So again, like I said, it's a very interesting time to be building fintech in India, because all of these pieces are in place, and it's just a matter of utilizing them to drive more access to financial services using these elements. As on building basis, if we had to do for, let's say, for investments, for instance, if we literally had to go door to door and collect, paperwork and get people's signatures on it, and, fake photocopies and all of that, which, by the way, I've gone through. I remember my first credit card application in India. I was just, it was so tedious. I even wondered how much it was costing the bank to be sending someone to my house, 2 or 3 times to just collect a bunch of documents. Things like that are all going to go away. So I think it's so powerful. It's cost effective. It's quick. It's cheap. It's convenient, and can spur a lot of innovation across a variety of products.
Peter, you are working with various fintechs, financial institutions, also have learned about digital identities, working on the regional scale, even beyond. Where do you see that digital identity, the benefits, but also like the differences between the different countries or financial institutions, how they approach it?
Yeah, actually, there's a tremendous amount of non-standardization, so to speak, in that regard, and it really has to do how a country has approached that and where a country is. And in the fintech space, that actually there's many fintechs that are offering solutions to identify customers, specifically customers that are not financially included. I think India really took a big leap forward when it created its national identity system and has been benefiting from that. But there's many other countries that don't have that environment. And when you start a financial relationship, one way or the other, you have to identify people. So there's a lot of solutions out there that in various ways are trying to get these things. And identity is just one part of it. One is who are you? But what do I know about you? That's very important when you want to lend to somebody. You need to know more about that person. What is your credit history, or what is your cash flow, for example? Can we do something with it? Or what's your reputation? What can other people tell about you? So there's a lot of creative solutions there, but there's a lot of differences there, and it has to do with partly what regulations are, partly where a country is in terms of standardizing these things. And I think specifically in Asia, there's still a lot of gaps. On absolute terms, things are not there, and also a lot of differences between countries. I think many governments are talking about creating digital IDs and have programs in place to do so. And I think that will drive things drive things forward. As you know, you're based in Singapore, and Singapore has done a lot of things to do that. But I'm based in Japan. Even Japan, as being a very advanced modern country, has only very recently started to create a national ID system. So it gives you a good idea that there's still a lot of work to do there. But the good news is that because this is not an unknown problem, there's a lot of technology out there that is increasingly easily available for banks and other financial service companies to basically bridge the gaps. Using AI to figure out if a person matches with an ID card and a selfie, or other things, so liveliness checks. So there's a lot of interesting new technology out there that make it possible to bridge the gap, even though we may not have, what India has done, for example, yet in place. So I think I'm very, what used to be kind of a big hurdle, I would say 5 years ago, most regulations will not allow you to do a digital onboarding. Many countries, the regulations are now kind of being put in place or being cleared to allow that to happen. And of course, that's super important if you want to do financial inclusion, because there's no doubt that financial inclusion will happen through digital means. It's not going to happen in physical means. So those are some of the observations I think I have around that.
Rajneesh, you previously mentioned that digital footprint as well that contributes or adds on to the digital identity or identification that Peter just spoke about. So how do you actually see that come together, or what is required in your view to build that digital footprint to get the necessary information on the customer, the user, to the financial institution?
Yeah. So I think Peter made a couple of very good points. One, he said that things are looking much better today than what they were, let's say, a few years back. And I think that's a very good observation, that all governments and all regulators do realize that, and they are moving in that direction. And however, life has to go on, so to say, right? I mean, we cannot wait for the whole infrastructure to fall in place before we sort of start the process of financial inclusion. It has to go together. And I think that's where this phase of transition is where probably the challenges lie for institutions like ours, like InstaPay, where, more so when you look at countries where the infrastructure may be quite good for the nationals themselves, but when you have a foreign worker, he may not be as well integrated into that infrastructure, and that adds a completely different dimension, where the foreign workers typically find it then more difficult to go through the process of financial inclusion because it's not as enabling for them. Okay, and so when so I think it's something which has to where the governments and the regulators have to work together. I would also think that the development institutions also have an important role to play there, because sometimes and I'm especially speaking from InstaPay's experience, where the foreign workers may fall between the crack, right? Because the governments have a lot to do for their own nationals, and there is always a heavy national agenda that governments focus on. Somebody has to also look at the requirements and needs of the foreign workers and also handhold the governments in a certain direction, I would say. And development institutions can do that really well because they have a good perspective across different geographies, across different countries, and bring a different perspective, which can be very helpful for specific country. And I think that is the way forward. Fintechs like ours would love to work with institutions which could then help us in creating that enabling environment within the country or across multiple countries when we work in different geographies, Rolf.
Thanks. Hina, to follow up on all that, there is more information that needs to flow between the different financial institutions, not only the identity. There is a lot of talk around open banking, providing that information, allowing access to information from different financial institutions. What do you see in that space when you try to collaborate with others for the information that you require?
Yeah, so there's again so much scope to organize all of this data, right? India specifically is a very data-rich country. The problem or the gap is to sort of organize that. Things are all over the place. Again, part of the India stack, which is so revolutionary, is creating this, not only this digital identity for customers, but then giving them a means to choose what amount of digital information they even want to share. So we have what's called a DigiLocker, where you can kind of upload all your critical documents, from your birth certificates to your driver's license to other critical documents. And then now with the launch of and you must have heard about it just earlier this month, so it's still very new. As part of that consent layer, part of the India stack, the account aggregator was launched. So this creates, again, a layer where the customer controls what information is shared amongst entities. So if I want to, let's say, apply for a loan, I'm not going back to my filing cabinet and trying to locate I don't know, my mark sheets from school, or my my pay slips from different jobs or whatever it is, right? And so I think that again is just part of the stack. It's this additional layer that and what's again really powerful about it is not just organizing this in digital format, but also giving customers the control, building that e-consent layer to be able to disclose this information when it's required. And all kind of boils down to speed and convenience, etc. There is obviously a privacy security element, and to Peter Rajneesh's point, I think that different entities in the ecosystem do need to come together to make sure this is this is effective, whether it's regulators, government, market players, banks, fintechs, you name it, right? So we'll have to sort of see how that evolves. I'm sure there will be teething problems as there is with any sort of new initiative, but again, the scope becomes endless. Access to products that people would never even have imagined before now becomes just so easy.
Rolf, if I may add a point here, this thought that comes to my mind and that we've been thinking about. So I thought I could just extend Henna's point here, and especially when she spoke about mark sheet and other things which are, not really financial footprint, but it gives you an identity because there's a background. And when we think in the context, our context of, let's say, foreign migrant workers, most of them actually have some financial footprint in their home country. So can you ensure portability of that identity in a form? And that could sort of help you when you are in a different country. Or if I am a foreign worker working in a country A and I go back to my home country, can I carry back my financial footprint there and then gain from it? Okay. So these are some of the things which, if that could be enabled, could help a lot. And of course, also using a non-financial background to then aid in the process of identity and of ensuring that you build some profile, as you Rolf pointed out about credit, for example, or I think Peter was talking about it. So those are some of the things if could be done and enabled as an infrastructure would greatly help people in the financial inclusion process.
Peter, if I may actually hand that on to you. You are working across countries. What do you see there that is already possible, that banks facilitate, that regulators allow with regards to that flow of information across borders, and where do you see the gaps?
There's actually, there's different stages and there's different things that are possible and not possible. If we go back 5 years ago, a lot of regulators and the climate was not ready for cloud. Cloud is very important if you think about digitalization. The reason is that a lot of the solutions that we currently have on Apex, we have a lot of FinTechs that have come together that provide a lot of the building blocks for financial institutions to come together, that they use APIs and they use cloud technologies to make that available. And so cloud infrastructure is a very critical piece to speed up the whole process of digitization. The opposite is to you build everything yourself and you need to have a dedicated data center, etc. Most innovators today start on the cloud, they're cloud native. But regulators have been kind of slow to react to that. But there are some very good examples of how what is possible today. For example, the Philippines has taken a rather progressive view on cloud computing in their country. They allow financial institutions to use the cloud outside of the Philippines, of course, provided that a financial institution meets various standards in terms of data management, etc. But it's not location bound. That's great because you can move much faster. It is in many developing parts of Asia, the infrastructure mobile phone wise has grown a lot, but cloud providers are still yet to kind of be everywhere. But they're on the internet. You can access them through that, and I think that's a very important area where the progress is increasingly being made. But at the same time, there is also countries that won't allow that. I think Malaysia, for example, will not allow data to be taken out of the country. Frankly speaking, I think there is going to be more sentiments around the world where governments are trying to bring the data back or insisting that it is under more direct supervision that has a lot to do with privacy, protection laws, etc. So I don't think we're out of the conundrum yet. But what is really important is that the infrastructure to really leapfrog our digital future, and that's not just in the financial world. If you think about agri-tech or edu-tech and a lot of other spaces where technology plays a key role, we need to have increasingly better access to these things, and we need to think more flexibly about locations and how do you control things. You can have you can bring things out of your country, but you can still have very good data controls around it. The location actually shouldn't matter, but we still have a lot of discussions to go through that. So yes, progress being made, but there is also still a lot of challenges. And other challenges, even though regulations may be in place, there's still a lot of mindset that has not changed, where people still are not very comfortable with the ideas of cloud computing or the ideas of modular systems, or and how do we deal with that? I think there's still a lot of I think practice is needed to perfect those things. So it's on the one hand we have regulations, we have mindset, on the other hand we have technology, and these things are coming closer together, but there are still quite some gaps at the same time.
Rajneesh, those are definitely some topics you are dealing with. The data localization, what data can you actually use from one country into another? Where does it need to be stored? And also the whole data privacy around it. How are you dealing with that?
Yeah, Rolf, I think Peter made some good points there in terms of the regulators actually becoming more strict in terms of how data is to be stored. But as of now, it's not a very enabling environment in that sense, is the way I would put it. So, for example, let's say if I have somebody earning in a country A, where he's a foreigner, and if he wants to access credit in his home country, it's not easy because there's no seamless flow of data. I mean, he left his country because he went to another country to become better financially, and he is, by all stretch of imagination, financially better, but he cannot access credit typically either in his country where he's working or the country where he's from, primarily because where he's working, people think, okay, he's a skip risk. He may just run back to his country. And there is not much of a financial footprint he has, so he doesn't have really a credit history. In his home country, there is no visibility of his income. They don't know whether he's going to continue with his job or lose his job. How do you bridge this gap? And that's the challenge that we are sort of grappling with. We don't have a solution right now, but I think it's a very pertinent question, and it's about a huge number of people out there who are working in a different country, doing financially much better, but not getting access to formal credit. And I think that's something that regulators need to think about and enable fintechs like us and other financial institutions as well to bridge this gap in a meaningful and in a compliant way, I would say. I mean, it's a very logical thing. It's just about having the foresight to say that, okay, this is how we do it, and you create an environment to do it. I mean, I don't see why this should be a challenge. It looks very obvious to me.
If you allow me to follow up on that, we all understand also the reservations of the regulators, in particular with regards to the data privacy that Peter mentioned. So what do you see as particular measures that are possible or that you have put in place to actually ensure data privacy, that it only what is required gets shared, it is properly protected, and so on? Rajneesh, can you...
Sorry, I thought there was a question for Peter, sorry.
Okay. I can also answer, but I think it's better if you answer it, actually.
Yeah, sure.
From a practitioner. Yes.
Yes, absolutely. Rolf, you're right. It's about choosing the right piece of information and allowing it to flow in a regulated manner. And data privacy is all about protecting the individual. So if it's my data and I want to share it with a financial institution, I should have a mechanism to share. And the regulators need to enable that. Don't protect me in such a way that I can't use my own data for my own need. That's not very productive. And I think that's where the solution lies. I think you need to give access and the ability for this person to access and transport his own data. How do you look at it, Peter? What would you say?
Yeah, I fully agree with what you're saying, and there is increasingly more kind of focus by governance on it. Everybody knows about GDPR, which started in Europe, but you see more and more countries do that. But I think also, irrespective of what regulations are telling you, because that's kind of, you should do this or that. I think if you run a business, you should have you should set your own guiding principles. And I think what's really important for financial companies is to focus on transparency around what they actually do with your data. Make it clear what data they have collected about you, show that very clearly, and have an ability to revoke that. And I think there's still a lot of way to go in terms of doing that. I think a lot of concerns citizens have around this, and it's not just financial data, but data in general, is that what are you collecting about me? What can you see? And have you asked me to do that? So you opt in to things. So I think if you set out a few simple guiding principles around it, if you have your own business, you can basically stay within all these guidelines, because that's all they're trying to basically do, to protect. You want to protect your customer. You don't want to lose trust with the customer. So, but unfortunately, in many cases, that's not the case. We start to collect, data greed. We collect more than what we need, or we're not transparent about what we do with the data, etc. So I think it's really important to build that, in order to build trust, to be very transparent about these things. And I think increasingly you will see regulations and laws coming out across many geographies that are basically going to say the same thing. And it will put challenges around things, but it also, once you have done it, it will also build the trust, and it will create more frictionless abilities to do so. I think Singapore has done quite some interesting work around a national way of collecting data around you that you can then share with your bank. It's kind of think of a wallet with your personal information. You log into that, and if you sign up with the bank actually can access that if you allow them to see that. And so those are ideas where you have the data, with you, and you can selectively parcel that out, so it's very clear that it's leaving your space, it goes in that space. But at the same time, you're not having to maintain all of the data across all these multiple points. I think if you live in a digital society, increasingly one of the problems is all the passwords you need to maintain. Where is all this data, right? And it's not uncommon these days that you have hundreds of passwords that you have. That means there's hundreds of locations where your address and all kind of personal information is sitting. So there's a lot of, that's the price of progress, because we only got there by doing, and then we realize, oh my God, but now we need to do differently. But I think there's going to be a lot of focus around that. And there's also interesting technology that is coming out that is trying to kind of solve some of those challenges. But I think transparency is ultimately the most critical thing in solving the puzzle.
Yeah, if I could just add on to that, I think within FinTech, right, the fundamental challenge, it has been just balancing innovation with regulation and compliance, right? You can't build all this without being compliant. But then if we were just trying to be compliant and be compliant with regulations all the time, then we were not going to be able to innovate and create solutions that could really kind of move the needle in terms of how services are being offered. So that's just a point I wanted to make. I think it's balancing the security, regulation, compliance while still innovating. And as we see, regulation does tend to follow innovation. So I think the influence can be has to be from fintechs, from folks building these platforms, and working collaboratively with regulators to drive these solutions. Sorry, Peter, you're saying?
Yeah, no, I just wanted to echo that. If you think, if you close your eyes and you realize what happened over the last 10 years. 10 years ago, cloud wasn't the thing. Blockchain didn't even exist. AI was not in focus. A lot of these technologies that are currently revolutionizing finance are very, very new, and the regulations that are there were completely not designed for it. AI opens up this whole Pandora box of bias and things. There's a lot of discussion on it. So the regulators are very busy these days trying to understand that. And don't forget that regulators are humans like all of us. They come with their own experience, and everybody brings the experience from the past to the future. So I think there's a lot of challenge there. And I think also regulators are looking at each other to say, hey, that's a good idea. We can borrow that and things like that. But the technology is moving so fast in my mind that it's really hard to to do that. And as you said, I think fintechs and regulators need to team up to to kick the tires where the tires need to be kicked. Another thing that's very interesting though is, and you see this in banks more than with fintechs. Fintechs are kind of how can I fit it in? But a lot of banks I have not realized that the regulations actually have changed. They have compliance regimes that are running, are still in the old days. They have not realized that, hey, this is now okay. And they're telling themselves that, yeah, but the cloud, no, I'm not really that sure about it. Should we really do that? Yeah, the regular, So they have not realized that that the times X have changed. The regulators in some cases are sometimes ahead of what is happening in the financial industry, and then are shouting that, hey, you can do this now, please do it, because there's also national interests, etc., for countries to modernize, to grow. You need that infrastructure to grow your country. You can't. Nobody is happy about financial inclusion or these things, because there are problems that hinder economical progress as well. So I think the tension between regulators and fintechs, etc., is really important, and experimenting and those things are happening. But I also must say that I've seen some regulators being very forward looking. It's like, wow, that's really a big step in the right direction. And I think then for fintechs is the opportunity is then there to fill the void. Because the moment the regulation shifts, the opportunity is there to fill the void.
In between, just very briefly, the reminder to our audience, please feel free to put questions into the Q&A or the chat. We may answer a few of them later on towards the end of our panel. But following up on where the discussion was just before with regards to the regulators, some of them having quite a good understanding, others maybe a bit less, more forward-looking or more holding on to the traditional systems. What do you see as the big steps that regulators should try to implement to actually facilitate financial inclusion? We have heard you, Rajneesh, speaking about the transfer of or access to data across borders. There have been other aspects to it. Maybe Rajneesh, if I can start out with you on that. Where do you see the regulators or also international organizations contributing to that financial inclusion, to enabling it?
Yeah. Rolf, some of the things could revolve around simplifying things, especially when we are talking in the context of financial inclusion. That how do you ensure that, like what Peter was mentioning a little while back, that regulators are a lot more are also adapting and are accepting a lot many things that they would have not accepted earlier. And I would say that's like taking a more practical approach. From the financial inclusion point of view, if the transaction size are small, if the ticket size are smaller, can regulators make the regulation even simpler, especially in terms of how people can be onboarded and how they can use the different platforms for payments, etc. Like, for example, in many countries, the cross-border remittance can be really very stringent in terms of regulation. In some cases, it's not. And it's not it's a dynamic thing. I mean, regulators are also waking up to that point, to that fact, and they're also sort of trying to simplify. But there is room for further simplification. And I think that's very important, that you don't link everything to some heavy-duty documentation and take a more sort of allow lighter models to function. And that will sort of help in financial inclusion. Other point which we probably will touch upon later in the conversation, but I just wanted to mention about was also this CBDC, those initiatives, which basically potentially can also be a game changer, because it allows potential interoperability of currency and a much easier movement of currency from one country to another and from one system to another. And that could be a big enabler, provided it sort of really leads to interoperability and it really can work as something which can work like cash, especially when it's in smaller quantity. And let me just spend a couple of minutes saying what I mean by that. The reason why cash is the preferred mode of transaction for people who are not yet, into financial inclusion yet, where they don't have bank accounts, etc., is largely because cash doesn't require documentation. You can give me $100, I can keep it, I can spend it, it doesn't matter. Nobody's going to ask me my passport details or my identity details for giving me $100. But the moment I wanted to put it digitally somewhere, then that's a challenge. I have to go through a whole lot of process to enable that. Can CBDC sort of break that shackle, so to say, and allow easy movement of money with little regulation, but for a smaller amount of money? I understand that it can't be a large amount of money. Then you are straight away talking about money laundering. So that could be an enabler, is what I think. Peter, over to you.
So Rajneesh, I think people have kind of underestimated the what cash really is, and if you go digital to replicate what it is, actually is a whole lot harder than it seems. And I'm not even talking if crypto is doing the same thing. I think one big challenge I've been noticing in that space is that it's not that technically we can do it. Once you move from cash, what you have in your hands, which is physically in front of you, it's in your pocket, and you move it to something that is digitally and is not physical, for a lot of people, they need to build trust in that. And that trust is not just, doing a payment. That trust has to extend to things is, what if I pass away? Will that digital money go to my spouse, for example? And there's a lot of gaps in solving these things that actually are solved with cash really easily. Cash in my pocket, I'll pass it on. And it's also really easy to understand. So there's a digital illiteracy and other things that still have to work, where people have to build up trust and understanding of what these things actually are, so that they won't work in their harm. Like if you have a digital wallet that contains your life savings and you lose it, is that money gone? For a lot of people, that's a surprise when it happens. And so I think there is still a lot of work to be done to make it to make it work like it is, actually builds the trust of people, creates the ease, and allows to do things that you normally can do. And I agree with you. What are the amounts at which what should be triggered, and all those things are there. But at the same time, these are also cultural discussions. How much control should a government have about your money? It's at the end of the day, you decide what to do with it. And they don't, the police agents should not live in your mobile phone. You just had that whole discussion with Apple, where they were going to scan images and everything. And there's a lot of bigger discussions. And some other countries, they're actually already in your wallet and want to control everything you do every day. And I think there are not technical questions. There are also big political questions. How cultures want to solve these things. The fact that technically you can monitor every single transaction doesn't mean that it should be monitored. For example, right? The technology can do it. Does it mean that we should do it? That's a very big question that needs to be answered. And there's a lot of debates are coming on that, but we need to be really careful to think those things through. And we need to also be respectful that piece of paper is not just, the paper may look clumsy and has a lot of downsides as well, but it also has a few things that we maybe want to keep as a property to that paper. Like to your point, small transactions. Why should one of the questions is what should the wallet be more regulated, more monitored by the central bank or something like that? Or not that technically you can do it, but the question is, the society wants to do it? Is really the question.
It's a very good point. So we have heard a little bit from Rajneesh, Peter, what they are looking for, how governments, regulators, international organizations could facilitate financial inclusion. We're almost up on time. Hina, your last word on how do you think financial inclusion can be better fostered? In particular, what can governments, international institutions do for that?
Yeah, like I alluded to before, it has to be a partnership, right? There's no one uh, body, there's no one entity that's on the hook to drive this. It is going to be a combination of, developing the ecosystem by governments, by regulators, by fintechs, by banks, folks coming together to really drive this change. Plus, a combination of that with funding plus infrastructure is what's going to, really, really change the game and drive us forward to a more financially inclusive world. So I will end with that.
Fantastic. I think that puts a great end to our discussion, actually, to make it on time. I think that partnership, as discussed on many occasions throughout that panel, is something that will be crucial going forward, how the financial service providers can interoperate, how governments work together with them, create regulations, how people can get that understanding of what is possible in today's fintech digital world and how it can interoperate with each other. So thanks a lot to the three panelists. It has been a great discussion, and I hope that our audience took away many of those interesting points that we were able to discuss. Thanks a lot.
Thank you so much, Rolf, and thank you to all the panelists. Thank you, Peter. Thank you, Hina. Thank you, Rajneesh. Thank you to the delegates as well for posting in your questions. And for the delegates and the panelists, here's a chance to become a proud owner of the RuPay on the go. Basically, you can visit the NPCI booth on this platform to apply for your complimentary RuPay on the go device. So please do drop by. And we'll be back with yet another exciting session shortly. Thank you so much. Please be safe. Thank you.
Thank
Take
you.
care.
Thanks. Thank you.